Mining technology, 13th of February 2024, China and Indonesia will have to reduce nickel production more as prices decline. There will be a decline in demand for goods from around the globe as the Chinese economy stagnates and contracts. Producers in China and Indonesia have decided to reduce their metal outputs to minimize losses from a protracted decline in nickel market prices. According to Reuters, the two countries, which provide 70% of the world's nickel supply, will probably cut their output this year by at least 100,000 tons, According to traders and analysts, if manufacturers wish to reduce the excess nickel on the market and raise prices, more cuts might be forthcoming. The metal's price skyrocketed at the beginning of 2022, rising by more than 250% as supply shortage worries quickly spread following Russia's invasion of Ukraine, a significant supplier of nickel. In the first half of the year, nickel prices averaged $27.858/t. They reached $48.201/t at their peak in March, the highest level in over 10 years. But prices have plummeted to about $26.000/t due to an excess supply worldwide, primarily due to increased output from Indonesia, which produced over half of the world's mined ore last year. Western miners like BHP and Glencore have postponed projects, scaled back on output, or given up on their nickel operations to compensate for losses from the continuous price drop. Glencore announced earlier this week that it intends to sell its entire interest in the Koniambo Nickel SAS joint venture in New Caledonia, citing unsustainable operations at the plant. Despite government bailouts and rescue efforts, the plant has never been able to turn a profit in its 10 years of operation. More than 230,000 tons, or about 6% of the supply, have been withdrawn this year due to cuts, but analysts claim this hasn't been enough to raise prices. Reuters was informed by an unidentified source at a major international producer that even more drastic cuts would be required to shield nickel miners' earnings. Nickel pig iron, NPI, a less expensive form of low-grade ore mainly utilized for steelmaking, contains a large portion of the excess metal used to manufacture stainless steel and in energy transition technologies like electric automobiles. The low costs, which have dropped to about $11.000/t, have rendered many NPI mills in China unprofitable.